Welcome back. This is the market. Lots moving in today's trading session, but the markets continue to remain under pressure. So let's find out what the charts are indicating on the frontline indices as well as some stock-specific ideas. For that, we've got Nooresh and Kunal Bothra right back. And Kunal, you were talking about that level of 19,300. That's been broken quite decisively. So what do you do now?
Exactly, and that's one of the major reasons why I have Nifty 50 as a chart for discussion today. And what I've mapped is the charts for the Nifty 50 and this classic indicator, which you call it as a zero barrier indicator. And whenever the indicator gets into a zone which is below the zero line, that's where we start to become a bit more negative or pessimistic on the indices. So this is the last 1.5 odd year of chart for the index. And this indicator, whenever it breaks below this zero barrier line or this zero line for itself, we've seen that the indicator goes into a downtrend. This results into the Nifty also forming a pattern of lower highs and lower lows. This was in March 2022. This was in April or 2022 when the indicator gave a breakdown and you saw the index going into a downward trend for itself. This was very recently in 2022 end 2023 start where the Nifty topped out and we saw the correction markets going to a correction. Again, when the indicator breaks below the zero barrier, we saw the index forming a series of downtrend and going into a 2 to 3 month of consolidation. Now we are very close. This is on yesterday's closing. We are very close to that breakdown point on this indicator. And that's one of the major reasons why we've been insisting that 90,300 mark has been a major support, and we'll have to wait out for that confirmation. And since if we close today below that 90,300 mark, we would probably get a confirmation on this indicator front as well, which could result into the index now going to a series of downtrend over the next 1 to 2 months. So the stance becomes extremely cautious, and traders who have been waiting out on the fence should start initiating fresh shots below 90,300 mark.
That's quite critical, the 19,300 print and a close sub that. Let's wait and watch. We'll find out towards the session close. Nooresh, what's the Chartbuster you've identified?
So that's a chart looking at Oil India. This chart is dividend adjusted. So if you look at the price action, it's a classical cup and handle formation. The stock had topped out around 270 last time, and over the last 6 months also, every time the stock came closer to 270, 75, it topped out. So the breakout is done, and this is a classical cup and handle breakout, so gives a good risk reward here. A stop loss at 275 and a target price of 350 to 400 in the medium term.
View coming in on Oil India. Let's find out what Kunal is picking out by way of his stock specific calls. Kunal?
So PVR earnings is something which looks attractive. I've been bullish on the stock from 15, 20, 30 levels. So would reiterate a buy 1800 as a short-term target, stop loss at 1700. And IDFC First Bank is also showing a lot of strength at this 88-89 mark. So would suggest a buy with a target of 94 and stop loss could be kept at 86.
Okay, Nooresh, what are the stocks on your list?
So first would be a buy on a Federal Bank, a preemptive buy. The stock is getting close to that 136, 138 breakout level. Stop loss at 128, target price of 150. Second is a buy on Lemon Tree, which has given a breakout today with very strong volumes. Stop loss at 95, target price of 150.
All right, there you have it. All of your top trading recommendations that our chartists are flagging off.